Good evening, everybody. Still a snowy evening here in Pittsburgh. The deer are feeding pleasantly at the corn bin. Haven't seen the raccoons this year. Last year we had about 8 or 10 big, huge raccoons, but I haven't seen them. Okay, we're going to do a little bit of kind of specific analysis tonight, and that's on breakouts. We've been getting a lot of questions on two questions: how to identify where they're occurring and what to do with them after they have occurred. So we're going to go through here a few of the PowerPoint slides, and then we'll do our session afterwards. But obviously, if we can identify the 12 major signals, that allows us to identify when something is reversing. And the breakout usually in this case is a series of dojis breaking out above the T-line. So if we know what the patterns look like, that becomes a very strong repertoire of knowing where to be watching for the new sentiment coming from investors, which this does something very, very great as far as investing is concerned. It allows you to hit exact timing for trade entry. Whether you're trading is a breakout different than a breakdown I have after my positions tank. Jamie will help you every way we possibly can, keeping you profitable. But it allows you to identify exactly when it's time to get into a trade, just based upon candlestick analysis and knowing what the signals tell us on a breakout situation. What is usually a result of a breakout? Something where you now have a new dynamic in that price move. Which one did I just do? Oh, so I always like to show this one. This one was a good one a while back where we saw a breakout. Again, that told you there was a new dynamic from what it had been doing prior to that. Then we had a little morning star type signal. We were buying the next day. And I always use this chart to illustrate that with candlestick analysis and knowing what the patterns are telling you and what the candles are telling you, it allows you to be in the right places at the right time. Now, are you going to catch every big trade? Definitely not. But you're going to be in situations where if you follow what the charts are telling you, the probabilities of being in the right place at the right time is immensely in your favor. So knowing the different patterns, like our little scoop pattern, tells us we can be buying right here knowing what our results should be, that we're going to have a strong price move. Or on a fry pan bottom, it's right at a resistance level. If they open up positive the next day, remember, we constantly, Harry, let's see, the back of the morning star was this kind of little day, down day, day of a doji day, and the third day was more than halfway up that candle. You can see it's kind of a little morning star scoop type setup. So remember, we always like to buy the signals when the stochastics are in the oversold area. Our trainings show that usually the breakout is going to occur when stochastics are in the overbought area. So this is why we want to be able to identify where or what pattern we have and where we should be looking for a breakout situation. If we add other specifics to it, like a T-line crunch coming right up to the resistance level, the 50-day moving average, and they gap it up through this area, we want to be buying because that tells us there's a new dynamic. This is not the gap up in the overbought condition. This is a gap up out of a resistance level. Different than our gap ups if there'd been a steady uptrend and then he gapped it up, that's usually exhaustion. If there's a resistance level and they gap through it, that means there's a new dynamic coming into play. So if we're looking at just fry pan bottoms alone, remember, you couldn't trade a fry pan bottom as just crummy. It's when it breaks out that we have this expectation. This is what we're looking for right here. So that tells us something new has now happened. They're breaking it out to the upside. And where do we want to look for the entry levels? At places that everybody else is obviously watching. We have the benefit of knowing that if there was kind of a doji sandwich right here at the 50-day moving average at a fry pan bottom breakout, and we know what the results of a doji sandwich is, more upside. We know what a fry pan bottom breakout produces, more upside. We're just adding everything we can to indicate what our next price move and what the strength of it's going to be. So another one, this is one that I like to show people because probably through the years, I've made most of my money off the slow curve. The slow curve is a little bit different. It's either your cup and handle or it's in an uptrend and they do a slow curve. It's for the fry pan bottom is usually a big rounding bottom situation. So anytime I see this type of situation and they're bringing it back up and they've broken through a resistance level, I'm buying because I know my risk reward factor is if they fizzle it, all right, I'm back out of the trade. If it works, it's usually going to produce a very big profit move. If I can see that slow curve bobble, there's my doji sandwich breakout, tells me I'm in the right place at the right time with that slow curve setup. So I love to see these type of things. I watch to see what it does once it gets to this level. And this is the advantage we have also is we don't have to wait around very long to see what it's going to do. We can see exactly what type of candle occurred when it got to a resistance level like right here, making it very viable to get into that trade. Again, this is just a high profit trade setup. You add the fact that it breaks through a resistance level after a slow curve. This puts you in the right place at the right time. So I'm showing this kind of as a education and kind of as a promo to say we are going to be doing some training sessions here in the very near future of all the big patterns or all the price patterns and the spots to be looking to get into a trade so that you're not sitting in a trade for a long time waiting for it to do something or the other. And this comes back to the fact that I'd rather be buying into strength knowing that it's confirming a pattern. So again, if we know the candlestick signals and patterns, like our little scoop pattern, where is it likely to break out? Through the handle on a scoop pattern and the 50-day moving average. This puts us in the right place at the right time. Let's see, the halfway point, yes, but that's on your buy. That usually if you're buying, you don't want to see it close back below the halfway point of the candle or the signal that told you it was time to buy. Can you show how to scan for these patterns? Oh, CE, I think if you ask that in the chat room, everybody's got the formulas. They can just copy and you can just copy and paste it. The moving averages area are the 200 is the red line, the blue line is the 50, and the gray line is the 20. These are simple moving averages. And the reason for that is that every major money manager around the world uses those moving averages to make their decisions about what they're going to do with their portfolio. We have the advantage of seeing exactly what those decisions are based upon the candlestick signals of what their decision were at those support and resistance levels. What is the T-line? The T-line is the 8 exponential moving average. Very simple concept. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back down and test it. So if I see something that looks like it's getting ready to do a reversal away from the T-line, I'm more diligent as far as putting a stop as far as coming out of that trade. And what, let's see, I'm reading. and thank you for your time today. If you have time, I have big position size contracts in the SPY puts and NASDAQ puts. Ask a question, Rod. Afterwards, we'll go to live charts. All right. So breakouts. Where will they occur? That's the advantage we have by knowing what the support and resistance levels are and what type of signals we have at those levels. Notice when it came up, every time it failed. This time it came up, failed, but notice what our next signal was. That Morningstar signal again. Told us they weren't selling it off. They were staying above the T line, and they came back up and went through this time. What happens when they go through a resistance level? Usually it's a major change of investor sentiment. If we know what our best friend signal is, which is the doji followed by a gap up. So you see that the buying continues right up through the downtrending channel. What does the best friend signal usually indicate? There's going to be a strong uptrend. What happens when they break through a downtrending channel? It's usually going to be a very strong uptrend. So everything we look at it on candlestick charts is something that's telling us what's going on in investor sentiment and what everybody else is watching. We just have the visual capabilities of seeing what's happening before everybody else makes their decisions. So what it allows us to do is put in the exact timing for a trade that if I was going to buy the stock and or calls, I'm buying right in here, knowing that I've got a breakout situation that one of two things are going to happen. If it opens positive, coming out of a kind of the big fry pan bottom type pattern and a T-line crunch, I don't have to wait around. I know the trade is working right now. Oh, Eric, don't short. Buy short funds, which will go up when things go down. So let's see, what else were I looking at here? Observe the obvious. They gapped up through the resistance level on a slow curve type breakout. Puts you in a situation where you've got some very good, strong price moves. So when we see candlestick signals and patterns at resistance, we get ready. Notice what we had right here on this kind of bobble pattern. How did they break out? With a doji sandwich. That told us we were in a new dynamic, putting us in a situation where the worst case scenario, I'd say the worst case scenario, one case scenario is, all right, we're going to be in a nice steady uptrend, but it's probably more than likely a good strong uptrend. Best case scenario is they do that uptrend in a day or two. How do you know when the up run is over? That's exactly why we use candlesticks. It tells us when the selling has started. David, everybody hold on to your individual stocks until we get over to the live charts. So if we know what our patterns are, wave one, time to take profits, wave two, wave three starting with your best friend signal, what do we know about this wave right here? It's going to be the same magnitude as this wave right here. What do we know about this doji gap up? Well, that's our best friend signal, number one. Number two, closed up above the T-line. Number three, broke this downtrending channel. Four, stochastic's coming back up. That's all the elements that we need to tell us it's time to be in the next price move. When they gap up through a resistance level, you got to assume that everybody could see there was a resistance level there, and when they gap up through it, that oh, that was the chart on the screen. I'm sorry. Oh, let me finish what I was saying here. If everybody is watching to see what's happening and we know what type of signals, we know that we have a new dynamic, probably a wave three. Okay, let's see. Let me go back. I'm sorry, David. Where would you short SQM? I wouldn't short SQM. Right now it's telling us we're in an uptrend. There's nothing here to tell us it's time to go short. Just because it may stop the buying at a, doesn't necessarily mean they're going to start selling it off. It may just mean they've stopped buying it. Yeah, so once again, the further you move away from the T line, the higher the probability is going to come back. But for all we know, you might just go into a 45 degree, and I'll get to the 45 degrees here in a minute. We also can use what everybody else is watching, like wedge breakouts. If we can see there's a wedge formation, and then they break out, tells us, based upon some buy signals right here, again, that little slow curve, we're in the right place at the right time. Yes, if this, let's see, since this was not a signal, this isn't a bearish Harami. Remember, bearish Harami needed to open below the previous day's close and close above the previous day's open. This is just a down day. For all we know, this uptrend can still be moving up in a 45 degree for the next 2 weeks, 3 weeks, 4 weeks. So it works just as well on the upside as it does on the downside. Anytime we can see where a wedge or a formation is breaking, notice we had a left-right combo. That's usually a good sell signal. If it opens lower the next day, we can be shorting. If it goes through the support level, we know we're in a downtrend until when? Until we see a candlestick buy signal and a close above the T line. If it opened lower, yes, and then faded down, yes, now you have a bearish Harami. Then you see if it opens lower the next day, that. So we have breakout expectations. Again, that 45 degree is usually based upon, if you see a strong price move breaking out, it usually creates a steady price move, 45 degree. And what's our criteria for holding on to this 45 degree? Till we see a sell signal and a close below the T line. There's a left-right combo. Yeah, left-right combo is a bullish or bearish engulfing signal after a doji. That little left jab, the doji, and then a big round right engulfing signal. So if I see something like this, where they gap up and they sell it off, doesn't look great, but what do we know about an inverted hammer type signal, especially coming up out of the oversold area? First of all, it's broken out. Secondly, they open up positive after an inverted hammer. What's our probabilities? Like 95% or better that we're going to be moving in a positive direction. Until when? Until we see kind of this. Remember, anytime they gap it up in an overbought condition, start looking for a sell signal. The further they move away from the T line, the higher the probability they're going to come back and test it. This is all just simple rules of when to buy and when to sell. You're not necessarily, or I'm not necessarily concerned about buying at the absolute bottom or selling at the absolute top. I'm more interested in catching high probability trade in between. Again, the bigger your correct trade ratio is, the higher your compounding effect will be. The T line, you just put the 8 exponential moving average on there, just like you would the 50-day simple moving average or the 20-day simple moving average. Oh, what did I just do? That one. So anytime I see this big breakout, again, looking at my slope curve, and where did it break out? Right here at the 50. What do I expect? 45 degree. When is it time to get out? Right in here. Then what happens? We're back in because what type of pattern do we have? A J-hook pattern. So as long as we know what to do, what to expect after a big price move, big breakout, then we can start analyzing the trend based upon the other patterns that we're aware of. Anytime I see this big price move, see the consolidation, and they started up, I'm expecting that 45 degree. This was what was telling us that they broke out kind of through this little downtrending channel. Look for a 45 degrees. So in that case, I'm looking at this and I start seeing a steady eddy. I can either buy the stock or figure out different option strategies for taking advantage of that big move. Now, those big moves also come out of the J-hook pattern. If I see something like this, a pullback, there's our little best friend signal. You cut the chart off right here. You see a strong price move, you see a pullback, and then they do a doji gap up, your best friend. What type of pattern can you anticipate? Obviously, the J-hook pattern. What do we expect out of this wave right here? Be about the same magnitude as this wave right here. Do you get out on the way up or wait for the candles to turn down and close below the T line? Depends on how far away I am from the T line. If it's something like this where it stayed close to the T line all the way up, first time I see it on a sell signal close below the T line, I'll close it out like this right here. Notice how it stayed fairly close to the T line in the overbought area. Then we had a left-right combo and a close below the T line. I'm out of the trade. Now I'm back in over here. And this is something we've been demonstrating in our emotions, how to keep your emotions out of your trading program right now, is in the old days, before candlesticks came along, if I got out here, first of all, I was probably happier than a pig in doo-doo that I had a profitable trade. I got out here. A few days later, they turned it back up. My first thought was, they're not going to fool me. They're not going to get me out and then get me back in and then turn it right around and take some more profits from me. Now I know what the patterns should be doing. Best friend up. I don't mind buying back here. I don't mind selling here and buying back here. Maybe I missed out on 45 cents or $1.10. I just know that I'm back in a situation where the probabilities are heading in the direction that I expect them to be. This is where I'm buying my doji sandwich. This is where I might be selling. What? Notice the signal here, the flutter kicker, and what type of pattern is it setting up? Another J-hook pattern. So I don't mind buying here. I don't mind selling here and buying back here, getting through that emotional stigma as, oh, sold out here, buying back higher. Well, that looks stupid. That's not stupid if you're getting out when it's time to get out and getting back in when it's time to get back in. What is the black line above the T line? The black line above the T line. There's a little gray line. This is the 3T line, which is a whole different training. The black line is the T line. Okay, so if I can see a J-hook pattern, the bobble pattern is a much more refined J-hook pattern. It's a resistance level, pulls back. Notice what it does when it pulls back. They can't close it below the T line. So if I've closed it out here because if I bought and immediately got back out, I can get back in over here knowing that my J-hook bobble pattern is in progress, but this wave right here is going to be the same magnitude as this wave right here. So I can calculate very visually where the breakouts are going to occur. It's usually at the resistance levels. Same scenario. If I bought down here on the inverted hammer or the doji gap up, where's my first target? Notice what happened. Remember our simple rule that the Japanese rice traders have demonstrated for us by telling us where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. Well, if we can see that we're getting in the overbought area and they've gapped up in an overbought area and did a doji right here at the 200-day moving average, they better open it positive on our simple doji rule, which means they're going to move it in the direction of how they open it after a doji. They open it lower, I'm coming out of my position. But when I start seeing that they can't close below the T line, I can always buy back here, knowing that my next move is going to be more upside. So knowing the patterns allows us to say, all right, we want to buy on the breakouts. That's what a fry pan bottom breakout tells us. That's the time to be buying. Or the classic pattern, which is a fry pan bottom which creates a very strong price move. A J-hook pattern is a very strong, knocked my headset right off. A J-hook pattern is a very strong price move followed by consolidation. Consolidation's over, the strong price move continues. So I know where to buy without lollygagging for a while in it. I know when to be selling. I know when to be buying back. Yeah, raccoon attack. So this is the type of things that if you know what the results are, these are what produce the big profits. Best friend, gap up through the T-line. The prerequisite for a very strong price move. Price move, J-hook pattern. Best friend, starting your next move to the upside. Bobble breakout, J-hook pattern. Are we expecting a huge price move? No, we know we're going to be heading in the right direction, but this is what we call convergence analysis. There's our belt hold telling us all the sellers have been sopped up. We're in an uptrend. We hit a bobble pattern. When we break out, we know we've still got more upside. How long do we hold this trend? Until you see a sell signal and a close back below the T-line. So again, this allows the trader, whether you're buying stocks or options, to buy at the ultimate breakout points of these type of patterns. We're looking for, like we saw in Labu not too long ago. We could see there was a downtrending channel. We had a big bullish engulfing signal. Then notice what happened. They went up through that pattern. And dang, I was going to give you the follow-up chart. But right now, Labu is trading up here. So either if you're trading Labu, you're profitable, or if you know Labu is the ETF for the biotechs, you go into the biotech area and see which of those stocks have the most bullish charts. If I see where there's a resistance level and they gap it up through, that tells me there's a completely new investor sentiment in that trade. And these are the trades that not only produce profitable trades, but big profit trades. So it's the old adage, if you're going to make hay, you might as well, or make hay when the sun shines, you might as well make the most hay you can do. You find the patterns that are going to produce the biggest price moves for you. And a lot of people say, well, shoot, I don't want to buy a stock that's already up 3, 5, 10, 15, 20, 40%. You sure do if you know it's going to produce another big move for you. I've heard you mention a few times about you are a swing trader holding 2 to 10 trades, but if you have a steady eddy for 25 days, would you still continue to hold until we get sell signal? Yes. I say my average trade is 2 to 10 trading days. But if I've got something where it's consistently moving, I've got one criteria. I'm going to hold until I see a sell signal and a close below the T-line. What's the most ultimate portfolio analysis? You've got 10 steady eddies that are moving well. You don't have to even think about doing anything. You just hold those positions until you see a sell signal and a close below the T-line. Now, obviously, there's going to be times when you're trading anything that you get to something like this and you have to decide, is it time to stay in or get out? No, there really isn't a steady eddy scan. It's just the realization that once you start heading up and it's not closing below the T-line, you probably got a steady eddy. That's human nature. And the Japanese rice traders say, let the market tell you what the market is doing. If I see this starting to move steadily, that's what it did down here, so that's the nature of this trend. You just jump on it when you see one. You're buying based upon seeing the signals to buy. Then you're hoping that it turns into a steady eddy. When you have a setup perfect to enter a trade, how do you know what strike or expiration to select to get in that trade? Elliot, that's a whole, we're going to be working on another option training session here pretty soon to decide which strategy you want to use, depending on what the strength of the signal is, what type of pattern it is, and how long you have until expiration. And I just have kind of a simple rule of thumb that if expiration is 3 weeks or longer, I'm probably just buying the calls or puts, depending on the direction. If it's somewhere around 1 to 2.5 weeks out, I'm probably doing the spreads, which are much more beneficial or much more profitable. And if it's less than a week, if it's Monday and things expire on Friday and it looks like things are still moving in the right direction, I might do a credit spread. It's not a whole lot of money, but the probabilities of making that money are extremely high. Are your candles 5 minutes? No, they're anything. You could be, this chart right here could be a 1-minute chart, a 10-minute chart, an hourly chart, or a monthly chart. Candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. And it could be I used to trade the E-minis on the 1-minute, 3-minute, 10-minute combination. Right now I trade futures, usually using my 10-minute chart as my bellwether. Then I'll drop down to the 5-minute and 1-minute as far as my entry. If I'm got longer term positions on, I'm usually using the daily, weekly, monthly combination. What call put in relation to price? Oh, Elliot, that's a whole different topic. We'll do that when we do the options session. Yeah, I enter and exit my if my 10-minute chart is telling me it's time to get into a trade, then I flip down to 5-minute to see if it's still confirming that the 10-minute chart is still going to be performing. What I don't want to see is that the 5-minute chart is now gotten oversold and starting to back off. That tells me my 10-minute chart is probably going to start backing off. If the 5-minute is still working well, then I'll flip down to my 1-minute chart. Because what I don't want to see is that my 1-minute chart has moved up nicely, causing the 5-minute and the 10-minute to look good, but it's starting to back off. That tells me both of those are going to start backing off. And if it backs off and does a J hook on the 1-minute, then I can enter. So yeah, we'll do. We're going to be doing, I think, a day trading session next. That's Washington's birthday on the 22nd. We're going to be doing a day trading session on that day. So we bought Navarro. We were buying the spreads, anticipating on this J hook pattern breakout that from the time frame we had, which was about a week and a half ago, that by the time we got to expiration, the 85.95, which we were buying at 3.5, would be at 10. The difference between the 85 and 95 on expiration date. So that just told us we had a high probability that we were heading in the right direction based upon this J-hook pattern breakout. Anytime I see something like this where they've gapped through, I want to be a buyer because my probabilities are extremely strong that not only am I moving in the right direction, but I'm probably moving in the right direction with a very strong price move. It just makes the timing. This is U.S. Steel. The timing to be buying is right here. As we can see that it's broken out of wave 2, and notice where it did it when all the institutions were starting to buy here on the 50-day moving average. So if I see a big price move, I'm expecting a 45 degree. If I'm expecting a 45 degree, depending on how much time I have, if I'm not buying the stock and I'm buying the calls, I can see whether I want to do a spread or calls outright. Best friend breakout, what do we expect? More upside. So it just puts you in the right place at the right time. What the trainings we're going to be doing eventually is getting people through the fear factor of, boy, I don't want to buy a stock that's already up 8%. What is the first logic or what's the most common response to a stock moving up 8, 10%? I'm going to wait for it to pull back so I can buy it at a lower price. Now, if you think of the logic of that, if they gap something up, especially off a doji, what do you want to see? You want to see strength. If you see weakness, what's that telling you about that uptrend? It's not going to be a very strong uptrend. And that's what we call the immaculate execution, because what you're saying is that you're so adept at trading that when it moves up and you wait for it to pull back, that as soon as you buy it, it's going to turn right around and go back up again. You've hit the exact spot where it's going to pull back to where you can buy it and it goes back up. That's a lot of wishful thinking. I would rather be buying on strength, knowing that this is now the beginning of a very strong price move. Looking for that 45 degree. There's our left-right combo after a big hammer. Breaks out through this level. I'm anticipating this one we're hanging on to. The same magnitude move as this right here. So this was Kate today. You can see how the fry pan bottom was setting up. The reason we recognize this or illustrating this one was look at the fry pan bottom. And Nora in our options room said this saved her, but notice how everything was moving in the right direction. This morning, the February 20 calls were at 30 cents. They closed at $2.59. The February 21s were at 5 cents. They closed at $1.50. So once again, it puts you in situations where, depending on how aggressive you are, it puts you in the right place at the right time. Julie asked that when we get to the live charts. So again, this puts us in situations where our timing has two elements to it. One, if you bought calls and it fizzled, you're right back out, hopefully with a small loss. If it works, you got some huge profits. So we're looking for situations like today, Amazon closed right here. Is that significant? Definitely. It's right here at a resistance level. The stochastics haven't gotten up into the overbought area yet. If they open this positive, you think anybody's going to notice? Definitely. Everybody's watching to see what it's doing here at this resistance level. If it opens positive, you probably got a good pop coming at this. It could have bought those options at that price at the open. Oh, not today if you were buying it on the gap up. But if you had started buying right in here last couple of days, remember there's our doji. Stochastic's still coming up. We're coming out of a fry pan bottom. We just broke through the T-line. If you're an aggressive trader, you buy some of these calls at 30 cents. If it moves, even if it moves a little bit, might have your 30 cents go to 60 cents. The one thing I keep coming back and trying to demonstrate to people is that if you know what the pattern is doing, and you're buying in this area, the probabilities are extremely strong that you're going to be moving in the right direction at the right time. Calls on Kate, out of the money. I don't know where Nora bought them. Nora's pretty good at getting these things right at the right time. So what we're looking at is, here's a situation where if they open this positive tomorrow on Amazon, we've got a lot more confidence to be buying right on the open, knowing that the probabilities are heading in the right direction. Did Kate gap up because of earnings, or did they gap up because of the rumor that they're trying to get themselves acquired? Now, it doesn't matter. Doesn't matter why somebody's buying this stock. All we have to analyze is that somebody's buying this stock. All right. So anyways, that's the breakouts. Where they do occur, where do they occur, and we're going to be going through sessions. So there's going to be a few in the live sessions that we can show what to do depending on what the candlestick signal is based upon that breakout. All right. While I'm shutting down the screen, I'll bring up the big screen. If there's any questions, this would be a good time to ask it. Let's see. Oh, hold on to your individual stocks until I tell Jim to do the double line, which we haven't gotten to yet. Let's take a look at some of the obvious ones that are good trade setups. And how to use the 1 minute, 5 minute, 10-minute charts to uh, do your enter and exit of those trades, depending on how fast you want to trade. There's some people that day trade where they may only make 1 or 2 trades, so they may be using the 10-minute and the 30-minute chart. Other people will trade a lot faster. They may use the 5-minute, 10-minute chart combination. I don't know. It's not very much since it's only going to be a 1-hour class. Oh, I don't know what I'm thinking here. Oh, that will be that will be sent out. Oh, as far as breakouts, that's just great. We are starting to put out the information again for trainings. So we've got the special. This package, I think, we've got set up at $497. I forget what it is. Is it $297? And that includes. See if I can bring this stuff up. That includes an analysis of all the patterns, the high profit patterns. Now, all right, $297 instead of $495. This is the advanced pattern package. Gaps at the top, gaps at the bottom, major moving averages, the breakouts, the cradle and belt hold patterns, the fry pan bottom, the J hook, and the scoop patterns. Each one goes into each one of those in great detail. And 1, 2, 3, 4, 5, 6, 7, 8. So for approximately $35 for each one. I don't want to use the old cliche that for $35 you're going to earn tons of money more. But what it's going to basically do for you is give you a lot more insight as to where the big price moves are about ready to occur. So knowing that, if we can analyze what's happening in the market, and you can see what's happening in the market. Ever since the first run, we've had a sideways fry pan bottom, and they broke out right here. So what do we expect right now? Wave 1, wave 2, wave 3. What was the URL of screen show? It's right above you, Harry. Becky's put it in. That's the link. I put it in, and Becky put it in. It should be in blue. How many days does it take? All depends. This could be a 3-month. This could be a 3-week. It's not so much how much time does it take. It's what your eyes can see very visually. That pattern is setting up. So it's not anything that you have to be a sophisticated analyst. If you can see there's a slow fry pan bottom, and this is the breakout area, at least you know what should be happening here. You're heading into the next wave, which could be lasting quite a while. You can see what's happened in the NASDAQ. It's never come back. We closed it out a couple of times, profit taking, but we're still way above the T line. Wave 3 is nothing more than counting that if this is wave 1, this is wave 2, wave 3 is usually the same magnitude as wave 1. And there doesn't have to be anything sophisticated about it, just that prices usually move in waves. Moved up, consolidated for a couple of months, now they're ready to move it up again. It doesn't matter, Bob, what you want to call the pattern on Amazon. All you really have to do is see that there's a resistance level right here. Your stochastics is still coming up. You had buy signals. If it breaks out through here, where's your next price target? Probably somewhere up in this range. So you're going to get another strong move. No. If this is wave 1, and this is wave 2, and this is wave 3, when we get done with wave 3 and it pulls back, this becomes wave 1, wave 2, now seeing if there's a wave 3. Do you short? No. Because the stochastics is still heading up. You're still above the T line. You'd have to have a strong sell signal, like a big down day and a close below the T line. What would that tell you? That would make an evening star signal right here at the resistance level. Yeah, then you could start thinking about shorting it. Where would you short it? Right back here to the 50, which would kind of coincide with now having a sideways channel setting up. Okay, some of the futures that we traded recently. We had bought the dollar the other day right in here because it had broken this downward trend. And then on this day, when it opened here and traded up here, we just said put your stop at where it opened. Because if it opens lower or it comes back down through there, what's that tell us about the 50? They couldn't get through the 50. Right now, we've got a sell stop to go short if it comes down through the lows of today. I think we've got it at 100 and 100400. If it comes down through there, what type of pattern do we have set up? This becomes your blue ice failure. They've fallen through the ice. They came up trying to find the hole they fell through. They failed. They've drowned. Where are they going? They're going to the bottom of the pond back down here. Would you do an expiration Friday on Amazon? You could. Not tomorrow, obviously, unless you really were a gunslinger. Maybe you do a weekly for next Friday. Or if you're more conservative, you do a March monthly. Okay, so we also put a recommendation out on cocoa. Ah, humbug. That's not the right one. I want to get to May cocoa. Bullish confirmation. Look for it to at least come back up here to this target. And we're watching March coffee. You can see how it's pulled back. Wave 1, wave 2, kind of a double bottom here. You can start buying this. We'll just be a little bit more where are the futures trades posted? If you're a member of the options room, there's we put out the future trades in there, and if you're a member of the options futures room, you'll get an email from Abe every time we put out a recommendation to be buying or selling. We put out that recommendation. Also, I copy and paste it right into the options trading room so you can see it instantly. Let's see. So gold looked like it was picking up a little bit of strength. That's not the contract we want to use anymore. Let's see. Gold is still moving up. This is the April contract. You can see how they came back, and this is kind of, again, part of the education we're doing to kind of eliminate your emotions, is we can see exactly what happens at support and resistance levels. Came up through the 50, came right back to the 50 and tested it, pulled back to the T line, heading back up. Where do you think this next wave 1, wave 2, wave 3 is going to be? Well, if wave 1 and wave 3 are equivalent, we're looking for it to go to the 200-day moving average. If that's the case, that means stocks like Nugget, those can be bought with the anticipation they could be heading up into this direction. Is there a membership for options alerts? Yes, that's in the options room. Now, we don't push membership to the options room. We have it there for convenience. So if you want to join the options room, it's part of the also an additional expense to the regular room. But if you email Abraham at candlestickforum.com, he can give you the information on that. The emotions training, yes, that wasn't a members only, Rob, but we're already partway through it. As a matter of fact, we're 3/4 of the way through it. We've got one more 2-hour session, not this Saturday, but the next Saturday. I don't know which one you're looking at. Is that gold? Let me run through some of the stocks that we have been in and why we're in them. Again, here's that scoop pattern, OCUL. So the more pieces of evidence that we can put in that there's been a reversal, the scoop pattern, the island reversal, the doji's bullish confirmation, the gap up through this level in the 50. What do we expect? A slingshot effect of the scoop pattern out to the upside. And what is our expected magnitude? Probably the same as this move right here. So again, everything that we can put into our analysis. Here's Fred. When it broke this downtrending channel, especially after 3 dojis, we started buying. And how long do we hold on to this? Until we see a sell signal. So again, a lot of this isn't very sophisticated. It's just merely analyzing what the charts are telling us. Notice what happened to AKAO after this big move. It consolidated, and then we pretty much have a 45-degree. We came out of it. We got back in it. And how long do we hold on to this? Until we see a sell signal and it close back below the T line. We're in Kiwi. And how long are we holding this one? Well, here's wave 1. Look at wave 3. Wave 3 is about the same magnitude as wave 1. So we're going to be a little bit more diligent as far as where we place our stop. So right now, probably we'll put a stop at today's open. Because if it starts selling here with this wave and this wave being approximately the same, what can we expect? Probably a profit taking back to the T line. TGH, another one that's been doing very well for us. Same scenario. Wave 1, wave 2. Notice how wave 3 of this J-hook started with our doji sandwich. Again, that simple question. What do we expect after a doji sandwich? More upside. If we expect more upside, what do we expect? Breaking out through here, going higher, creating our wave 1, wave 2, wave 3 doji. ABEO. There's that J-hook pattern. And this J-hook pattern has a little bit more relevance because if you take a look at, you can pretty much draw a trend, maybe not, right down through the tops here. They broke out, especially right here at the 50. That told us there was a new dynamic in this trend. When they break out of kind of a wedge formation, that pretty much tells you there's going to be a lot of new buying going on. That was the same scenario I was trying to get to with the Labu chart. Let me make this smaller. You can pretty much do the same thing with this chart. Pretty much draw right down through the tops. Look at the big bullish engulfing signal, and they broke through. How long do we hold on to this? As long as you don't see a sell signal and a close back below the T line. So the major benefit of the visuals of candlesticks is, I don't know why that doesn't come up over here, CAI. Heckler mining, also in a little J-hook pattern. So if you closed out here in the last couple of days, get ready to buy back, because if this is wave 1, wave 3 should take you up good number yet. Hold on to your individual ones until I tell Jim to do the double line. And then probably as late as we're going to be tonight, probably want to keep your requests down to one per person. Another breakout of this downtrending channel, AUPH. Just stay long on this one. How long? So you see a sell signal. GoDaddy. GoDaddy, not too exciting in here, but it did a belt hold type signal, which means they wiped out a lot of sellers. They start trading this positive, especially if they bring it back up through here. You want to be a buyer. That means they've wiped out all the sellers. And this is one that I meant to have over in the breakouts, because this is what we call our message. See your big fry pan bottom? They gapped it up. But notice what happened on this message. They opened it and closed it down here. What did that tell you? There was lots of profit taking. But what was the message? Sell. There was new buying, and then they started taking profits. So what do we use candlestick signals to infer? Well, the bullish Harami told us the selling had stopped. You could be buying on positive trading the next day, because that tells you the profit taking's over. The message is clear. This is in a breakout mode. So that was the same reason why we recommended MDCA, because it gapped up yesterday, opened higher, traded off, but we'll still be buying this one if we see when the profit taking of today is over. Because where do you think our next likely target is going to be, especially coming out of a doji gap up, your best friend? I would suspect you're at least going for the 200-day moving average. Remember, these gap ups pretty much tell you that there's a new dynamic in that stock. Here's XL, also doing a J-hook pattern in a steady uptrend. I think these are some of the sciences. Notice what happened in EXAS. There's that resistance level. It opened positive. What's that tell you? They don't care about the resistance level anymore. They're going higher. There's the resistance level on Amazon. If they open it higher, what's it telling you? They don't care about the resistance level anymore. And ESPR broke out. There's your kicker signal, your trend kicker that broke out through this level. Remember, our strongest signal is the kicker signal. Trend kicker signal tells you the same thing. There's lots of buying. Now what's happened? A J-hook pattern. You might have a lot more upside at this point. Oh, this was another one to show you what happens after the best friend signal gap up. Gapped up strong enough that they broke it right through this level. But this is the your best friend telling you that there's been a new dynamic in that stock. CHH, same scenario. There's your fry pan bottom. A lot of people are afraid to buy in the overbought area, but if it's coming out of a pattern, that's where the prospective breakout is going to occur. I think, let's see, Reliance Steel, it is sitting right smack dab on the resistance level, big fry pan bottom. If this opens positive tomorrow, expect another move this same magnitude. And I think this was a short that looked good. UPS, there's your hanging man gap down. That's still, if you want to have a short in your portfolio, that's probably a good one. Okay. So the opposite true. They gapped it up, profit taking, and then traded lower. Do we immediately get out? No. If you get in something, I forget which one it was, MDCA, no. Because remember, they told you something here. They gapped it up. They broke out of this. There's a new dynamic. Now, today they did some profit taking. I would still be a buyer if it comes back up through today's open, because that tells me the profit taking's over. They're starting to buy again. Okay. Are there any general questions on candlesticks, especially the breakouts? Remember, we're going to be doing some extensive training, and it's usually going to be in the higher advanced patterns. Whoops. So this is a good chance to get all those patterns so you can be studying them. Because what we've discovered is the more you look at these things, the more it starts sinking in. So you can be studying so that the next time we do a training session on the J-hook pattern or the belt hold, you've already got some understanding, and it makes it that much more clear. J-Nug and Nugget spreads are 2 cents. Those asking about which option to trade must already master candlestick signals. They are expert traders. Me, I still have lots to learn about trading stock with the trend. We'll take chances with leverage products when I master candles. Yes, that's what I usually tell people. Learn how to trade the stocks first. Then once you get that pretty well under your belt, then you can start toying around with getting extra leverage. They're downloaded, Gordon. I think you just hit a button and they download. All right. Jim, go ahead and do the double line. Okay. Can't even speed read that fast. All right. Is that Fannie Mae? Fannie Mae doesn't come up here, I don't think. Whoops. Fannie Mae doesn't come up here anymore. I think it's in the pink sheets. Phillips 66, stay short. Yes. Adobe, stay long as it stays above the T line. Siri, another one where you can stay long. Not anything real exciting, but you're in a nice steady uptrend. I'd still use the T line as my stop. Boeing, same scenario. Not real exciting, but a nice steady uptrend. There's lots of them right now. They're in these steady uptrends. Obviously, with the confidence that's coming back into the economy, with Trump wanting to make things better for U.S. companies. Click. We're still hanging on to this one. Notice the gap up. Still anticipate a 45-degree as long as they don't close it below the T line. CPE, nothing wildly exciting here. If you were long and it closed below the T line today, the only thing you can do tomorrow is net better open positive and start trading positive. Otherwise, you want to close it out. PGR, just stay long. Still in a nice steady uptrend. Oh, why are we doing this? BRZU. The Brazil fund. That's a dark cloud. Again, remember, the further away you move from the T line, the higher the probability they'll come back and test it. So if they open this lower tomorrow, I'm suspecting they're going to come back down to test the T line. CSX, nothing there. You're in a wedge formation, so it's not going anywhere. So this would be one that if I owned it, I'd get rid of it and move on to something where I can see the direction. Worst case scenario is you close it out, and then you put a buy stop right up here at around 49.90. But if it comes up through there, then your next wave is started. And Freeport probably want to be going short on weakness from here. Not a good looking chart. Goldman, all the brokerage and finance companies are trying to break out. So if they go into wave 3, that's a pretty good indication that the whole market in general is still moving up steadily. Price line, all you can do with this one is stay long as it stays above the T line. Radion has to open positive tomorrow. If it opens lower, your trend's going to slow down. I'd probably come out of it and go on to something else. C-SPAN, another one that has to open positive to stay in it. More than likely it will because your stochastics is still heading up. But if it opens lower, I'd close it out, telling me that there really isn't any great direction in this one. MTW, stay long, but another one that you want to see open positive. If it came back down through the T line, you're probably heading back to the 50. SSNC, big breakout. Now, when they do this, which is profit taking, if they open up positive tomorrow, you can be buying because that tells you the profit taking is over. And Crown Castle, nothing wildly exciting here. If you're long, you can stay long. I'd just be very diligent to see what it does once it gets up here to the 200-day moving average, but it's not a real exciting looking stock. PACB, stay long. This T-line crunch pushing up through, I would suspect your first target is up here to fill the gap. Carbonite. Nothing to get real excited about here either. No direction. Nothing, can't find anything good to say about that one. Goog, as long as Goog is in a steady uptrend above the T-line, may not want to trade it. If you like it, you stay long. May not want to trade it, but as long as it stays long, that means the confidence in the general market is still good. You just stay long, or the market will still stay long. Twillo, as long as it stays above the T-line, you stay with it. You don't want to see it close below the T-line. And CLF did some backing and filling today. Still in potentially this 45 degree. I wouldn't, there's really no sell signal, just some selling and an uptrend. And AGIO, nice breakout. Stay long on this. There's a gap up here to fill, so it's still heading in the right direction. Two Harbors, that's a nice fry pan bottom. I think the volume's all right on this one. Needs to break out through that level. Another one of the financials, I'd be more apt to buy it if it breaks out above this level. So it's out of the sideways range. If you own it, you can stay long. Just watch to see what it does at that resistance level. ACAD, stay long, but this is one where you definitely want to see it open positive. Kind of your double doji, keeping that uptrend in progress. JNUG, you can be buying the gold stocks on positive trading tomorrow because they're back up above the T-line and they could be breaking out these downtrending channels. And Tesla, if it opens lower tomorrow, their evening star signal in the overbought area says it's coming back somewhere. And so this is one where it come back to the 50, the 200, or this is where you put everything that you can suspect everybody else is watching, such as the Fibonacci retracement numbers here, here, or here. So again, the more things we can put on our chart that we can analyze, not that it's going to hit one of those targets, but if it bounces off of here or bounces off of the 50, at least we know that's what everybody's watching and that's where they're they're buying. TSO, getting a little bit sluggish, needs to stay above the T line, but you do have a left-right combo. So that doesn't make this a very exciting chart. If it opens lower, I'd probably close it out and move to something else. Again, this one broke out, and it's still what I would consider here at the T line, but it has to open positive tomorrow to stay in it. And IPXL, nice fry pan bottom. Whoops. I'd be a buyer of this one on positive trading with the anticipation we're getting up toward this level. Wouldn't be afraid to be buying this one. We did Tesla. Or is this Pittsburgh? Yeah. Plate glass. Another one you can be buying on positive trading. Doji sandwich breakout bobble pattern. That's a good looking chart. May not make you a whole lot of money, but I'd be more apt to be buying an option on that one. United Pacific, very slow upward. If you like it, you just stay with it, but that's one you just set in the account and hold for a while. Parker Hannifin, just stay long as it stays above the T line. UPS, this one right here is kind of a hanging man, and then they gap it down. It could be could call it a hanging man and or a doji, followed by a gap down. And where did they gap it down? Through the low of the hanging man and below the T line. So that pretty much tells you the sellers are definitely in control. There's a little cradle type pattern. I would suspect if they break through this downtrending channel on positive trading, next place you watch is the 50-day moving average and see what it does at that level. U.S. Steel, we did. That one has broken out nicely. You just stay long until you see a sell signal and a close below the T line. We did AQMS. That's got the breakout. Just stay long as it stays in that 45 degree. CXRX. Nothing real wildly exciting here. If I was going to be buying this one, I'd have a buy stop above today's high. That would tell me the J-hook type pattern is in place. ARNC, just stay long. At this point, you can see it's getting a little bit soggy. I'd put a sell stop down below today's low. If it came back down through there, it's probably coming back to test the T line. And Intel, I don't trade because it's way too slow. If you like it, it has to get above the 50, but even if it moves from here all the way up to here, you're only looking at about a 3%, 4% move. It's just Intel's too big an institutional stock to trade. Twillo, just stay long as it stays above the T line. Edit came up nicely, broke out, look for a 45 degree. At this point, pick out a spot that tells you where the sellers are taking control, which would be, if I was long, I'd put a sell stop right below today's low. If it comes in that direction, you know the sellers are in control after the doji. IMMY, you can buy this one. Got kind of that little scoop pattern. Then just watch to see what it does once it gets to the 200-day moving average. 3D, nothing here. If you owned it, you had a left-right combo, and it closed below the T line, you should have been out of it. I also told you this level right here was acting as resistance. So I'd be out of this one right now, and I'd be more apt to go short if there's any weakness from here. Gold Corp, stay long. Notice they haven't been able to close this below the T line. TMST, did somebody say this was trading in a direction after hours? At this point, if it opened positive tomorrow, I'd still be a buyer. The bonds just aren't moving anywhere. I wouldn't be long or short any of the bonds right now. First Solar, another one that's having a hard time getting through this upper trend channel. Stochastic's turning down. If this opened lower tomorrow, I'd close out any long positions. Tells me that the CIA, for some reason, isn't coming up. Tells me First Solar isn't going to be breaking out. And OPK, you can stay long on this one. Whoops. ATMN, nothing exciting there. If you're long, it needs to open positive and trade positive. If it opens below the T line on the 200, close it out. They've lost the buying strength. MMK, another one you can be buying on positive trade in doji sandwich breakout of this level, making your next target the 200-day moving average. Oh, Kate, if you do, it's based upon speculating. So you pick a spot where you wouldn't want to see it trade back down through, and that would be probably today's open. So if this opened positive, I would be trading it off my 10-minute chart versus the daily. And VRX, that's a nice fry pan bottom. You're having a little bit of trouble here, but I would stay long until you see it close below the T line. And uranium has to open positive also tomorrow to tell you the T line is holding up. If it opens lower, close it out. Probably getting some pullback in this choppy uptrend. YY, stay long. Pick a spot where it shouldn't be coming back to. I would probably pick something right down here. But if they start selling it off, they're probably coming back to test the T line again. Apple was acting well, still in a steady uptrend, using the 3T line as support. And HIMX, somebody was asking about this today. They got stopped out. We are demonstrating that after the buy signal and the breakout, even though it traded back here, remember, the candlestick signals are based upon two important factors, the open and the close. So they said, well, if I stopped out here, what should I have done? Well, when it came back up, you could always buy back in. So right now, I'd stay long. And if I was long, I would put a sell stop just below today's low. It shouldn't come back down through that level. And MRNS, slow curve. At this price, it needs a lot of volume. But I would suspect there's your target, kind of coinciding with that top right there. DGAS, just stay long as it stays above the T line. E6, kind of a, this is what we call your column reversal. Big down day, indecision, big up day, kind of a cradle pattern. You can still be buying this one on positive trading. At this point, if this is the candle that told us the bulls are in control, it shouldn't close back below the halfway point of this candle. If it does, you close it back out. ADI, stay long. Notice how yesterday when they gapped it up, they used the T line as support. And that's important because hardly anybody, very few, minuscule percentage of people in the world use the T line. PAC, I would just use the T line as your stop. And OUCL, I would use today's open as my stop. If it comes down through there, it's coming back to test the T line. Facebook. So anyways, I was saying that the T line, nobody uses that. So when it inadvertently uses the T line as support, it's not because it's acting as a magnet and everybody's watching it. That's the natural support level. Facebook, getting a little bit soggy. It closed back up above the T line, but it up there. You don't want to see this close below the T line. As a matter of fact, if I owned it, I'd probably use today's open as my stop. It shouldn't come back down through that level. Hertz, if you bought this yesterday based upon it breaking out, should have closed it out today. You can always buy it back if it comes back up, but right now it's not telling you anything. You need to see it confirmed to the upside again. Avid, stay long as it stays above the T line. CVRR, big bullish engulfing. You can start buying this one again, but the anticipation is coming back up into the trend channel. Let's see, we think we did CXRX, eBay. All you can do here is stay long as it stays above the T line. XME, same scenario, and what you really want to see is a breakout through this level. That would be your breakout area. It needs to stay above the T line. DXCM, this one has to open positive. If it opens lower, there's nothing there. There's no direction, nothing. I'd be out of it. Medtronics, all you can do is stay long on this one. SSO, stay long. EPL, stay long. Good looking chart. TSE did a shooting star gap up. If it opens lower tomorrow, especially coming down through today's low, I'd take profits because that's probably what's happening. It's going to take profits back to the T-line area. Zyop, again, use the T-line area as support. I'd be a buyer of this one at 7, knowing that it broke out through the upside of this J-hook pattern. Bank of America, slow uptrend. Not anything wildly and exciting, but at least you know these banks are now heading or have the prospects of heading into wave 3. RJF, just stay long. Nothing wild there except a steady uptrend. See, we did Avid, stay long. We did edit. KBE for the bags, yes. That's KBE and KRE. S&P, both of them you can stay long. AMD, this one you should have closed out today. It needed to open positive and trade positive with the doji on the T-line, and it didn't. So close it out. You can always buy it back on the next buy signal. AQMS at a 45 degree. Oh, the Aussie dollar. I don't remember what the Aussie dollar, I never traded. CNBX, nothing there. Freeport, yes, you can go short on this one. There's a little gap right here that could possibly be heading back to. NVIDIA, if you were short, we were watching to see if it would hit the 50 today. Why am I doing this? And it did. So this was a explanation today that when it hit the 50, that's when you flipped your 10-minute chart, and when it hit the 50 and did a Morningstar signal, that told us if you were short, you covered your short position because they were using the 50 as a support level. DBO, the oil fund, just sideways. Oil, we're not doing anything with oils because there's no direction to oil prices right now. ILMN should have been closed out today. It needed to open positive and trade positive. Should be out. Facebook needs to stay above the T line. UPS on the short side. Well, if this is wave 1, wave 3 should be the same magnitude. So this was a figure this out. 14-point move. That would tell me that we're heading down to about 97, 93 or so. Charles Schwab, nothing exciting here. That's one of the weaker sisters. If you're long, you stay long, but if it opens lower, you can see you're kind of still in a sideways. That's a non-interesting trending stock. FEYE, another one that could be shorted on weakness. If this is wave one, wave three would take you down the same magnitude. GDX, the gold vectors, get ready to buy if they break through this little downtrending channel. Target, nothing. No direction. I'd be someplace else. This True Car, kind of the same scenario. Nothing. No direction. And ConocoPhillips, that one I'd be more apt to be going short. Still not a very exciting one, but blue ice failure could take you down to the 200. TSMT is at 19.25, so it's gapped up. That might be still worthwhile going after since they gapped up through that resistance level. Look for some more upside on that one. Apple we did, just still a nice steady uptrend. Did that wrong. APL, Apple. EWZ, Brazilian fund. That did the bearish or the dark cloud. If it opens lower, you take profits. UVXY. Oh, let's see what this is. That. Notice they couldn't keep it up above the T-line today, so you're still in a downtrend. Did we do DGAS? I think we did. DGAS, you stay long. Charter, nothing. I wouldn't be long or short. Just no direction on this one. Usually I use TCNet. Usually you have to type a J to get to the jump box to put the symbol in. P6, we did that one. Showed resistance, yes, but look where your stochastics are and notice what the signal was, a big gap out. So I'd be a buyer and then just watch to see what it does once it gets to the 50 again. When you say I would use today's open as my stop, do you mean while the trading is in progress? No. If which ones were they? I would have my stop right here. That if they have enough strength during the day to bring it down through that level, the sellers have taken control. So that's the stop intraday. Oh, yes, we did. CXRX. CXRX. Which is nothing real exciting. Again, at this price, you need a lot of volume. But if I was going to be buying, if you're long, it needs to open positive and trade positive. Otherwise, if it opens lower, you're still in this wedge formation. Baba should be out of this one. And they brought it back up yesterday. You want a hammer type signal. That meant if the bulls were in control, it should have opened positive. The fact that they opened it lower and traded it lower, the bears are in control. So you have a double top and you've got a gap to fill here. I'd be out of this one as far as any long positions. PEIX, you can stay long. Just watch to see what it does once it gets to the 50. FXA, stay long. Oh, that's the Australian dollar. Okay. That's the trust. So it must be still moving in an upward direction, so you can stay long in it as long as it stays above the T-line. SYNT, that's your kicker signal to the downside. So this is why you want to know your signals. What happens if you see a gap down below the previous day's open and start going the other direction? Tells you that the bears have taken this with tremendous force. It used to be I'd sit there, if I own this one and they gapped it down, my first inclination was, oh, take it up one more time and let me out. But I discovered if they have enough force to gap this down below the previous day's open, start trading it down, there's only one thing you need to do, and as fast as possible, sell it. Now, without you sitting there, because it used to be, I'd say, oh, maybe they'll take it back up. Now maybe they'll take it back up. Now I can't sell it here because what if I sell it here and they take it back up? And finally, at the end of the day, they're not taking it back up, but that's where I close out the position. Now I know that if this is a setup for a kicker signal, close it out. Now I can look to go short and make back that difference pretty quick. Let's see, we did FTX. AMAT, not yet. Now, if it opens lower, you can probably be going short, but your first support level is only right here at the 50. So if it opens lower, yes, you could be shorting it at that point. NVAX has to open positive. Whoops. Definitely needs to see a lot of volume, but you have broken out through this kind of wedge. Stay long. If you're a buyer, it's your buy stop right here. If it comes back up through there, you're pretty sure that the profit taking is over and the breakout is still in progress. Good year. Notice how your run-up started. There's that little belt hold type signal. So what's the question? Look for a gap, wave 3. No, right now you're still in the first wave. So you just stay long until you see a confirmed sell signal. And MFC, nothing, sideways. I probably wouldn't be long or short this one. If you're long, you stay long, but it needs to stay above the T line. American Express, just a slow, steady uptrend. You can stay with it as long as it stays above the T line. Cloud, big bullish engulfing. This one you can get ready to buy in positive trading. Remember, they wiped out a lot of sellers today. Noah, that one has to definitely open positive. Probably wouldn't be one of my most favorite charts, mainly because the percentage movement is very small. And Nordic, another one that if I was anything, I'd be short. Notice your kicker signal started this downtrend. CRM, stay long, but don't let it close below the T line. Did I do CME? Cummings? Chicago Merc? Still not very exciting. It's caught in the sideways wedge. It needs to break out through the top here to do anything. Salesforce has to open positive. American, nothing exciting here on this chart. I'd be someplace else. We did charter earlier. Just nothing there. I wouldn't be long or short this one. No direction. We did Baba, Johnson & Johnson. another institutional trader that looks all right. You can be trading this. It's got a nice chart to it. Now, remember what happens when they break through a resistance level? The first signs of a sell signal, they're probably going to come back and test it to see if it's going to act as a support level. Sears holding. You can stay long. It's not very exciting. It's still caught in this downward trend channel. Nothing that I would probably go after at this point. Hasn't CYNT moved down too much? No, remember, George, that's the whole point of watching the signals and the breakouts. That's a kicker signal. As a matter of fact, I'll probably recommend going short on that one tomorrow, or suggest it. The two that I'd be going short right now would be UPS and SYNT. Micron, stay short until you see a buy signal. Confirmed. Texas Instruments. You can start buying this one. It's also not a very exciting percentage mover. But from this level, you've got the prospect of it coming back up to the top of the trend channel, which is going to be getting very close to 10%, which would be all right. We did ZASM. That's the one where the best friend reverse. Use today's low as your stop. It shouldn't come back down through there. And DPLO, nothing. Just sideways. I'd be someplace else. XLNX. Another one that's not real exciting until it breaks out through this level, which is right there at that level. So you can buy this on positive trading, breaking this downward channel, telling you your next wave is starting. PLG, nothing. If there's nothing here, if this opened lower, you definitely should be out of it. Massey, yeah, this is where, remember, where do most people buy? They buy exuberantly at the top. This is where you start watching to take profits versus buying. Whenever you start seeing the big buying up at the end of a uptrend, that's everybody getting excited, getting in, and that's where you want to start taking profits. AGN, just stay long. Don't let it close below the T line. PTCT, you can start buying this one on the little scoop type pattern with the idea that this is kind of your support level heading back to the top of your resistance level. We did FedEx. FedEx, another one that has to break this downtrending channel. Still not a good percentage mover, but if it broke this level, let's see if I can this level right here, yeah, now you might be in a wave 3. So you need to see bullish confirmation to break that out. USPH, stay long on this one. That's kind of broken out. Yes. OCLR, I would just stay long, but be careful because now you're kind of up here at the top of the trend channel. I would use today's low as my stop. If it came back down through there, that's pretty much telling me this trend channel is still in progress. Oh, no, Mrs. Bigalow has she's not feeling well tonight. She's got her soft lenses stuck in her eyes and she can't find them. So, ROL, that Rollins, just a steady uptrend. You stay long. Shopify, All right, there's your big buying at the top, unless it had a breakout of some sort, which it hasn't. So this is where you start looking for selling. Put your sell stop just below today's low. It shouldn't come back through there. Okay, that looks more gray. That looks like what my cat types every day for me. Discovery has to open positive tomorrow to stay in it. If it opens lower, go someplace else. Costco, stay long. Ever since your kicker signal, stay long. Now that you're in the overbought area, pick a spot where it shouldn't trade. I would use today's low. It shouldn't come back down through there. If it does, that's the start of your selling. Net tees. Look for a 45 degree to come off of here. NVIDIA. I'd cover the short position. I wouldn't go long yet, though, until it closes above the T line. Play big long-legged doji right at the resistance level in the overbought area. Makes it very simple. It's going to move in the direction of how they open it. So if they open it lower tomorrow, close out the position. Thor, you can stay long. Fry pan bottom, up in new territory. Use the T-line as your stop. Another fry pan bottom in Lincoln National. You can be buying this one going into wave 3 if it trades up above today's high. All right, call. Today's low stop intraday. Yes, today's low stop intraday. Shouldn't trade back below that level if you were in the overbought area. HCP, nothing real exciting here. I mean, you can be buying it in the morning star signal. So if you're buying it, you definitely need to see it break out through this level. If they get up here, that means they're coming up to the 200-day moving average to fill that gap. Moss, just a slow, steady uptrend, not anything real exciting. And potash, no direction whatsoever. I wouldn't be long or short this one. And same scenario. This one's stuck in this wedge. If it opened lower, I'd be out of it. You can always put your buy stop up here somewhere, showing that you broke out. Oh, let's see. I'd put a stop right here on intraday. If they have enough strength to come down through there, that means the profit taking has started. And why would we suspect that? Because you had big buying in the overbought area. So start watching for selling. Yeah, right now, even though the market is overbought, it's not showing any sell signals or showing any reversal. So just because it's overbought, remember, we're still looking for a reversal signal to tell us the sellers are taking control. HQY, nothing. If I was anything, I'd be ready to go short, especially if it came back down through today's low. That would tell me the T-line and the 50 had failed. Yes, this is being recorded. Link today's recording. All right. So we did Moss. We did AVGO. Lulu. Nothing. I'd be someplace else. And one more. Juno. Juno, you stay long. If you see a fry pan bottom, you just have one simple rule. You stay long as it doesn't close below the T-line. And Netflix is the weak sister of all the biggies. Right now, I wouldn't be long or short. There's just nothing there. You can always buy it back if it comes back up above the T-line. All right, everybody. Hope you got a little bit of insights on the breakouts. We're going to be doing a lot of training on that stuff because that's where the big money is being made. And members, I'll be in for a few minutes tomorrow morning. Then I'll be driving to New Jersey for a big fraternity bash that we have every year. So with that, everybody have a good evening. We will see you in the morning.